askSlim, best and riskiest stocks. First half recap. I know, every year it's crazy, but I do predictions at the beginning of the year. Kind of like to do what other analysts do, I guess, and take some risk and see how my chart reading goes, and really, overall, hopefully help investors because it's a bigger picture look. And what I do is then usually recap it in the middle portion of the year, see if there's any stocks I want to take out of those lists and or add to the list, and then see what the percentages are kind of at the mid-year point and see how it's been. Most years I do pretty good, usually beating by a little bit, and that's what I hope to do. This year it's been crazy how good it's been. The up stocks have just soared, and the stocks that I thought had a lot of risk, well, they've overall gone up by just a little bit. Still another half of the year to go, of course, but we want to catch up. We want to see how we want to change this, and always stay up on what we talk about. When I do this, of course, I use chart patterns. I use my cycle analysis. Also factor in commodities, because if there's specific commodity groups that I think are going to make a specific move, then it's going to affect those stocks. I also look at valuations. So there's some fundamentals that actually do come into it. And I also look at my assumed market trends for the overall stock market. This year, like I say, it's been like crazy good. And I don't expect to be able to be that good in the coming 6 months, or again in the beginning of next year. Still, I do expect that my analysis is going to often keep people out of trouble, because it's really based on some proven technique that I think has worked over many, many decades that I've done this. So what we're going to do is we're going to take a look at the best stocks, the ones that I thought would be best for 2016, at the list. I'll show you a couple charts, and also at the riskiest, and you get a sense of how I do this. And then we're going to take a look at 15 new additions, 3 that are going on the best side, best stocks for the second half, and 12 that are going on the worst side. I guess that gives you a little hint as to what the overall analysis is suggesting for the second half of the year as to where the greatest risks might be. So before we take a look at the list, let's just talk about where and how the analysis works. What I look at, and we're going to put up GDX, because GDX was one of what I thought was the best reads for the year. I thought that gold was going to go up. The patterns were suggestive of a 180-point advance from the beginning of the year. I was clear that I thought that was going to happen, and that it would lift the gold stocks, silver stocks even more, because there's a leverage play in there. So we're going to look here at just an example of GDX as one of the stocks, so you can get some idea in here. And this pattern, you can see this is year end. There's a little blue faint line right in here that you can see. Now at the end of the year, I had seen a base being built in here, and that's where you get kind of this perfect ideal cycle, as we call it. And you could see the cyclic movement in here. I mean, it's pretty clear this was negative. This was your base being built right in here. It failed right at a perfect resistance area that was in there. And then when we turned up in the cycles, it exploded to the upside. I had anticipated this actually happening, getting a good lift. The amount of the lift and the fact that we're now actually a second cycle into the rally is not really what I expected. I actually thought that it would be even better second half of the year than it was first. So, I probably don't. I probably get a little ding for that because I thought it would be later on. But you can see here's the 2 cycles right in here, and just a phenomenal upside move. So that's just an example of why I thought they were going to be good. I love the commodity. I thought it was a base in the pattern being built, and I thought that they would be strong stocks. So well, let's just take a look at another one in here that I thought was going to be good, which was VA. Now, there's no hint of anything in here, right? It was the valuation in this one because I love the company. I love the way they operated. It was only trading at an 8 PE. And to me, it seemed like at the end of the year, right over here, it was just one of the better values. And I thought that there would be some pretty decent moves in some of the airline stocks. So this is Virgin America, and I thought it was going to be really good. Talk about really good. Well, the stock got taken over. So essentially it went from we're at the end of the year, right around 35, it broke all the way down to 26 and then gets taken over at 56. So that was some spectacular result there as we look at that. So there were, I just wanted to give you a look at that on, what I thought was the best stocks. And let's just take a look now at the list. And you can see how overall these 12 stocks that I thought were the best of the year did. And here is that list right now. So this is some spectacular results. Virgin Atlantic, they were bought out. That's up 57% on that buyout. Deere was up 7.5%. Cat up 25% for the first half. I have a line through it, and that's because I don't think it's going to be good for the second half. So I pulled it off of here. Now take a look at silver and gold. SLV up 41%. Pan American Silver up 170%. GDX up 117%. Newmont up 120%. Just incredible moves in that category. And it was all because I saw the base being built and because I thought the commodity itself, gold and silver, was about to make an important bottom. Just unbelievable. So here is a really bad one, CSIQ. And you'll notice I didn't put a line through that one. This is, in my opinion, has a high possibility of being one of the best movers in the second half of the year. Hillary Clinton gets elected. She's going to be very pro-alternative energy. She's, of course, leading in the polls. Also, the valuations in here are crazy cheap. And probably one of the best of all. It's a Chinese, Canadian and Chinese company, and I think there's still a good opportunity in there. So I want to recap all of these. Xilinx down 2% in here, and I still think that's a favorable chart. AMAT up 28% for the first half, and that one I still think is a good chart, so I'm not pulling that one either. And the Twitter here up 25%. Did I skip KBH? KBH up 25%, and I've pulled that one because of what the group looks like. And Twitter down 25%. It's been coming up a lot in here, and I think it's an opportunity to exit because of the amount of jump that it's had. So I pulled that off the list. First half total on the stocks that were that I thought were the best for the year. 9 advanced and 3 declined, an average gain of 42% for the first 6 months. That is absolutely nutty. And of course, it's all because I was really so right in the gold, silver market. So that is a great performance. I pulled 3 stocks off of here, and I'm going to add 3 stocks to this at the end when we get through the review. So that is the best and really spectacular performance in there. So now we're going to talk about the stocks that I thought were going to be the worst for the year. And there are not any really giant movers in here. I'll put up what was the best one of the group, which was Celgene, which best because it fell the most. I thought that the pattern in there was negative, and again, I want to kind of give you an idea of what I was looking at when I thought so. So here it was at the end of the year, right over here, right there. So my thoughts in here were that there was an attack going on in this group as far as their hype, the pricing that they get for their drugs, especially by Hillary Clinton, and I thought it was very political that this group would not do very well, and that turned out to be a pretty good call, as you know, the stock was right over here at the end of the year. Now, what really I didn't like was this. This is where there was a cycle bottom right over here, and there was a cycle bottom right over here. This is negative. You see, it's pointing down. It went lower than it began, and then it failed right over here at the resistance area. So at this point at the end of the year, having bounced back, I thought there was a ton of risk in here that we would end up having a stair-step downward movement, and that the political environment was going to be pretty bad for it. So here's that stair-step downward move on that cycle and this cycle, and now this cycle it's in is still going down. And I still think the environment is very bad for this stock. So that gives you an idea of one of the negative ones. Let's take a look at another one so you can get an idea. Federal Express. My thought in this one was that now Federal Express is not really having a bad time of it this year. It's about even for the year. And this one has the colored phasing in there. So you can see the negative cycle in here and the negative cycle in here. It got like only up to the resistance zone in here, and it started to roll over. Here's the pricing at the end of the year. Here's where it is right now. So it's basically at the same level. It had a big break. See the red zone there. It had a monstrous rally with the market, and now is rolling over. So this one to me said there's very little upside at the beginning of the year, and it actually had a very, very wide swing. And now I don't like this stock still, and I've added a similar stock to this in the additional 12 negatives, because I think that Amazon is really making a big move to their own deliveries. And I think that and the combination of problems in Europe, I think you'll get a rally in here. But then the second half of the year, I think that there's a lot of risk. So I'm going to leave that on there. But this is why I just wanted to see where my analysis came from in there in FDX. It was really very much a play on the fact that Amazon was, I thought, going to do much more on their own, and that is the truth. So that gives you an idea as to the stocks, how I did the analysis in the negative stocks. Here is the list of the stocks that I thought were going to be negative for the year, and take a look at that right here. The ones that I thought were the riskiest. So, you know, the stock market's up 3.8% for the year. And you could see in here that basically there were not any real major moves. Like I said, Celgene down about 16%. That's the biggest decliner. Netflix down 11%. Humana down 3%. And TripAdvisor, well, that's the worst one in here, down 24%. Of the stocks that went up during this period, you could see Federal Express and Triple M and GD. And notice that I didn't put any lines through those because I still think that there's a lot of risk in these. Panera, I think, is outrageously overpriced, and I think it could fall significantly. JCPenney, I still think, is a $2 stock, and I'm going to be repetitive about that. And this one had a monstrous 33% gain because there's some believers in there that this brick and mortar company can somehow rescue itself, and I think that it's impossible. IBM had a nice pop at 11%. The pattern in there was slightly improved, but now it's turned bad again, so I'm leaving it in there. And the only one I'm pulling out is Trip. Trip had a very negative pattern at the end of the year, and then what happened was it improved. So let's just take a look at that Trip Dollar Tree, DLTR, which had a bad pattern and then improved. And let's take a look at what happened so you could see why I'm pulling it off of there. This is all about, just kind of teaching, teaching myself too. What did I look at, and what was the negative about it? So when I looked at it, it was in a pattern that I thought was a problem of valuation and resistance. So this chart location, you could see right over here, end of the year, it was right over here, right at that point. I thought that that was a point where it did not have a lot of upside left to it. So when this pattern in here was rolling over right here, it had all this time to decline. I thought it was going to be a sharper decline in here, setting up a more negative pattern. So what happened was that this was a positive cycle right there, which said that you're likely to go above that high, and you see it blasted above it. And now the cycle is still positive. So I can't really justify, other than a valuation, of keeping this on the list when there's so much going on in there that looks like there's a lot of sponsorship in the stock, and that I think will likely be, if it comes off, I think some buying will come back in there. So I'm not real thrilled about leaving that in there, so I'm pulling it off. So that is a look at my best and the riskiest stocks for the first half of the year. So now what we're going to do is look at charts of 15 stocks, 3 that we're adding to that I think are in positive formations that have a decent amount of upside. I'm looking for 10-20% possibility in there. And then we're going to look at 12 stocks that I think are either outrageously priced or are setting up patterns that are suggestive of declines coming in the second half of the year. Thanks for watching the beginning of our recap for the first half of the year. Actually, the next part of this is for our members. So if you want to see those 3 stocks that are being added to our best and 12 stocks that are being added to our riskiest, become a level 2 member, just $33 a month, and you can get all of our videos. Level 3 members get our rankings and setups on the 71 best traded stocks, and level 4 members, all of our charts and everything else you see. So go to askSlim.com, take a look at our membership. We hope you enjoyed this video.
Well, I'm going to the city and I'm going to do a stage show.